Assalamu alaikum and good afternoon, everyone. Thank you for joining us. We are pleased today to update you about Sahara International. And I'm joined with me on my right, Mr. Craig, who is our Chief Financial Officer. And on my left is Mr. Khalid, who is our Chief Retail Banking Officer. And to his left is Mr. Manishi, who is our Chief Wholesale Banking Officer. So we've got an agenda here which covers the market context and about Sahara International, the vision and strategy and governance framework, business overview and financial review. And after that, we'll have a Q&A. We are living in a very interesting time with a lot of disruptions we see globally, but the good news is in GCC and Oman in particular, we are very well placed. We have seen significant improvement in our fiscal position with a current account balance in surplus. The GDP growth for 2022 has been very good, and we expect the outlook for 2023 and beyond also to be positive. The debt level to GDP has actually come down. We are pleased to see the reduction both in value and percentage. And the interesting part is the Oman competitiveness. If we look compared to the rest of the world, the overall ranking of 53 is relatively good. And the future outlook, the future orientation at 71, that also is very encouraging. We look into the opportunities under the Vision 2040. The government has actually laid down a number of new projects across different sectors of the economy, be it on the energy and manufacturing, or construction, or power and water, and tourism as well. And therefore, the opportunities that are available out there in the pipeline of these projects is substantial. So I see the private sector now has a chance to really play a catalytic role in advancing Oman economic diversification program. In energy sector in particular, Oman is actually blessed with the natural resources and the location to be able to actually position itself as one of the very few countries in the world that could actually play a very significant role in green energy. We can see there the amount of investments that are planned up to 2050. It's about $140 billion for green hydrogen projects. And the government have got these pipelines and strategies in place to pursue these important projects. And these will actually help shape or reshape Oman economic future and will complement quite substantially the overall Oman diversification program. So all in all, we see a lot of opportunities and potential, and for the private sector now to play a significant role in advancing Oman economic diversification program. For the banking sector, it has been very steady and resilient given the challenges that we had to go through during COVID and post-COVID and what we see globally. And I'm glad to see that the banking sector has actually proved the resilience over this difficult time, and the growth has been quite steady. And the outlook we have for the banking sector, you can see there is a modest kind of growth projected over the next 5 years at 4%. And all the matrices actually are very encouraging. The banks are very, very much liquid and well capitalized, and looking at the credit quality of the banking sector is encouraging relative to the circumstances or the challenges that we had to go through. So Sahara International, it's the bank that is known to the market. It's a young, dynamic, vibrant, fast-growing digital savvy bank. We are actually operating all across the region, the regions within Oman. We have got 39 branches, 30 are actually conventional and 9 are Islamic, but also we have got the digital distribution channels that actually complement the physical channels. So we are able to maximize and scale our market coverage all across Oman, across all the regions. We are serving over 300,000 customers, and we have about 900 employees. Our ownership structure changed, especially towards the end of 2017, and we are now predominantly owned by the government institutions by 68%, and the rest are private institutions. We have invested quite heavily on the digital platforms. We're going to talk about that. And our strategy has been to solidify our domestic presence, which you may have seen that through organic growth and also through inorganic growth. And I'm sure you have read the news on what kind of opportunities that we are pursuing as part of our growth plan. And in addition to that, this year we'll be opening our first overseas branch in Saudi Arabia. We announced that already. That is our first ever branch outside Oman as part of our growth strategy to internationalize our business. The key strengths actually, if I have to summarize, is we have a very strong corporate governance. We're going to talk about that a little bit on more details, robust risk management framework and culture. And we have very sound capitalization and liquidity buffers with a robust long-term growth strategy that we're going to talk about that in a while. And the financial performance has been very solid and very resilient over the last 5 years. We're going to touch upon that in the financial section. And obviously, we have very strong ownership structure, and that is proved by the kind of capital raise we have actually done over the last 3 years. You've seen our equity CET1 has actually been increased over the last 5 years, all of these to support our growth plan, and we are going to talk about that in the next sections. The strategy is very clear for us. We have a vision that actually directs us to become a world-leading Omani service company. And this vision is underpinned by 4 key pillars. The purpose, which is to help you win. The promise, by delivering responsive and responsible services for your ever-changing needs. And then we've got the principles. The principles are largely more vision. More vision is more to do with being progressive in our thinking and making sure that we are relevant to meeting our customer demands, and more value, creating more value, meaning everything we do is connected to the customer's life, is actually leaving the customer life. And more velocity. More velocity is more to do with the speed and scale of the services and that's why we invested very heavily in our digital platforms to help us scale up and speed up the delivery of services. And the personality also helps us to invest internally in our people. We're going to talk about that in future. So these 4 pillars are actually underpin the vision of becoming a world-leading Omani service company. And on the strategy is also very clear for us. It's underpinned by 4 key pillars as well. The first one is to reimagine the business of banking. Why we did this? We have learned a lot from the global trends that we see that are actually changing the competitive landscape. So for us to remain relevant and resilient, we need to make sure that we adapt to the changes, market changes continuously, and also reevaluate the value chain. That is another pillar that underpins the strategy, and reconnect with our customers and rebuild the organizations, which are the things we are going to talk about in future slides to give you a sense of the kind of investments we have made that are in line with a strategy to deliver on the vision of becoming a world-leading Omani service company. Obviously, we have defined our values very clearly, being open-minded, be straight up, and doing the right thing and making things better every now. And also, we have clearly outlined the winning formula for us. I'm rushing this up just to allow time for questions after all of this. Creating formula is basically, the winning formula is basically creating an ecosystem of services. This again is very much guided by the vision we have put in place. Now, over the last 5 years, which we are going to see the quantitative measures, we have been building the foundation on the brand, on the people, on the technology, and the processes to help us actually deliver on the growth aspirations that we've put on this strategy. And as a result, we can see financially, also apart from investing into the business, we can see the growth results that we've achieved over the last 5 years in terms of the total assets, in terms of the deposits, and the overall profitability and the size of the balance sheet, which has substantially grown over the last 5 years. And all of these is intended to serve the requirements of all key stakeholders, starting from the shareholders, the employees, the customers, the regulators, and society at large. This is just giving you a snapshot of the journey we have traveled since we started the 5 years strategy. Now we have completed the 5 years, and we have got the next 5 years, which is building on the achievements we have actually done over the last 5 years. And we are making sure that we stay relevant and resilient in whatever we do. We have learned from the trends we see in the market and how companies, when they lose relevance, what kind of fate eventually they have to face. And we do not intend to be part of that. So what we are doing here is to solidify our domestic presence. I've talked about that previously through organic and inorganic growth, and also internationalizing our business by opening a branch in Riyadh, which will happen during this year. And so far, given what we have done over the last 5 years, we have actually proved to be the fastest growing bank in Oman. We observe a very robust corporate governance and risk management framework. We have the board and the board subcommittees and the management committees as well. All of these are empowered and sufficiently to actually execute their duties, and all the risks, the checks and balances ensured they are intact, with the regular audits from internal audit, from external auditors, from the central bank examiners as well. So to ensure that we are in compliance with the regulatory requirements. Right, so in terms of the business lines, we actually segmented our businesses into 3 parts. The first one is the wholesale banking that has got 81% of the 69% of the total assets, with 81% of the income share among all our businesses. We have Mr. Manish, who is heading the wholesale banking. I would like him to highlight briefly on the wholesale banking business.
Hi, good afternoon, everybody. It's a pleasure to actually interact with all of you. In wholesale banking, our focus is how do we actually increase the share of mind and share of wallet with our corporate and government clients. Keeping that as a key parameter, we have actually designed our wholesale banking org structure in line with the client buying behavior. Such a way we understand, focus on SMEs, large corporates, government bodies, ministries. Coupled with these segments, we have created efficient product teams which work cohesively with the clients to customize the product offering. How we operate is with the three key strategies. Number one is how do we increase the share of products penetration with our existing clients. Second, with the changing face of Oman and considering Oman 2040 vision, how do we actually selectively add new clients, support the capacity expansion happening in the Sultanate, and contribute towards growth of the overall economy. And third part, what Mr. Ahmed mentioned, is to digitize the entire banking process for our clients. We believe that by doing that, we can actually enhance efficiency significantly, improve the transparency, keeping client as a priority. It's our endeavor to improve efficiency and transparency, such a way we can make banking seamless and cost-effective for our clients.
The second leg of our business is the retail, and I will let Mr. Khalil give some highlights on our retail banking business.
Hi, assalamu alaikum. Good afternoon. Retail banking is very advanced in the bank and is contributing fairly to the income of the bank. It has segmented to cater all the needs of all type of segments, be it on wealth management, Sahara first, mass again, and also it has a specific products for youth and for women. For the last 5 years, we have been working really hard and invest a lot of effort and a lot of investment to improve our digital platforms. Today we are almost competing in terms of technology. There is a lot in the kitchen, in our kitchen, that we are building for our customers. Our products, be it on liability side or be it from loans, are competing in the market. Is diversified again to cater all the different segment within individuals or within retail banking. Our wealth management, we have been focusing to link it with Oman 2040 vision to support the investors who are coming to Oman newly, and we cater all their requirements to smoothen their process to invest here in Oman and to add value to the country. We link very well to the strategy, the overall strategy of the bank, and there are a lot more coming soon.
Thank you, Khalil. And the last leg is the Islamic banking. Unfortunately, our chief Islamic banking officer is traveling. So the Islamic banking also has been growing modestly well on its asset book and the income share you can see there. And actually, it very much fits in within the overall bank strategy and its growth and strategies. Although we have got 9 branches for Islamic banking, but the digital channels help the Islamic banking to scale up and reach out to customers all across Oman in all the regions. Now, for the financials, financial review, this is the section we wanted to spend a little bit more time, and just want to give you the 5-year picture. When we started the 5-year plan and closed the 5-year in 2022, how far we have traveled and how much we have grown. You have seen there, the total assets have grown by 45%, and this has helped us actually to diversify our book. And also the customer deposits have grown substantially by 56%, with the CASA in particular, the low-cost deposits, growing at 133%, which is substantial, and that gives us an advantage in increasing our margins and also be a lot more competitive in pricing. And our operating profit has grown also significantly by 87%, and the equity, as you might have seen, has grown by 93%. This is just to demonstrate the shareholders' commitment to supporting the growth plan that we've put in place. So the last 5 years, quantitatively, you can see the picture here. but qualitatively, we have also invested quite substantially into the institution to prepare us for future growth. So all of these are investments we have made, and the 5 years have prepared us to take the challenges of the next 5 years. It has given us the motivation and the aspirations to actually scale out beyond borders, and that's why we are opening in Saudi Arabia, and we are going to talk about that a little bit more. But for the time being, I will let my colleague Craig to take you into more details on the financial review section.
Okay.
Craig.
Just to reinforce comments from our CEO in terms of the 5-year growth forecast, just to give you context, that equity growth number represents 250 million Omani riyals of increased capital in order to support the growth of the organisation. Mr. Ahmed mentioned the 45% growth for the 5 years ending 2022. As of March, that number is actually 63%. The bank's asset base has reached 4.6 billion Omani riyals, $12 billion US dollars, which represents a continuation of the bank's organic growth story. Of emphasis is the growth in our customer deposits, which exceeds the growth in assets. This is very fundamentally important for the bank as we look to control and manage the cost of funds, which is obviously a very key part of the bank's ongoing profitability. You mentioned CASA as being a key driver. Operating profit is a very key focus, which represents the net operating income before impairment provisions. I'll be discussing shortly the bank's approach to credit, managing a lot of its legacy loan portfolios, and that has caused a reduction in the bottom line profit, but the underlying operating profit is a very strong growth story, which is the sustainable area where the bank is focusing on its growth. And we'd expect the cost of risk to normalise over the credit cycle. In 2022, we saw the cost of risk as high as 1.4% as the bank increased provisions. We saw in 2021 that cost of risk was 1%, and Q1 23 we're down to 0.7%. And I'll take you through that story. But in context, if we then look at the earnings and profitability, sorry, Jim, earnings and profitability. Thank you. In terms of earnings and profitability, our 2022 results reflected a strong rebound in our performance, given the challenges of 2021. Operating income up 20%, net profit by 23%. Cost of income ratio has reached unprecedented levels, now marginally behind Bank Muscat, noting the bank's continued investment in technology and people. Just want to pause on that. If you look at the cost to income ratio percentages, where they're back in 2018, when the bank commenced its 5-year strategic plan, that increase reflects the investment in people and technology as the bank built its platform to execute its strategic strategy. And what we're now seeing is the benefits of that. Organically, we have that ratio down at 41.5%, which is a leading market indicator. So the bank's strategy is being achieved. If we look at the net interest margins, the bank's cost of funds, how we've been managing our CASA, that is a key driver to having moved from 2.1% NIM back in 2018 to where we are today at 2.6%. The market continues to see pressures on cost of funds NIM. That is market pressures, and we believe the bank is well positioned to respond to that. We continue to focus on our CASA strategy as key to managing that cost of funds. Customer deposits, just to reinforce that we continue to fund the bank's growth primarily through growth in customer deposits. We maintain a strong NIM within our risk appetite framework, and this is again a contributor to the bottom line profit as our liquidity management. Diversification of our income. The bank looks to increase its non-fund related income as a basis for accelerating the profitability of the bank. In terms of the returns, thank you, gentlemen. In terms of return on average equity, we've seen an improvement in the returns on average equity. The numbers you see here have been adjusted to be more precise in relation to the timing of the capital that has been injected into the bank, being 40 million in 2019, 50 million in 2021 and 160 million in 2022. And next, asset quality. Touch briefly on asset quality. The bank's non-performing loans have increased since 2018. And in response to the increase in those non-performing loans, the bank has been providing coverage, keeping a strong coverage ratio with the impact flowing through our P&L. In terms of sector concentration, the bank has proactively looked to move away from its exposure on construction, with a movement of 5% from construction to an increase in manufacturing, as we look to balance that portfolio. Funding and liquidity, reinforcing the points earlier regarding the importance of the loan deposit ratio and the CASA. You can see certainly with the CASA to total deposits ratio, that movement from 44% to 64%, which is a very significant and steady movement over the last 5 years. And as you can see, 21 to 2022 is a strong performance as well. LCR ratio, as well as NCR ratios for the bank, are well above regulatory limits. And these ratios are set internally against the bank's risk appetite statement. So these ratios remain very much ahead of regulatory requirements. Next on capitalisation. Capitalisation, I mentioned the emphasis on the increase in the capital for the bank. The bank looks at its capital plans on an annual basis. As part of the ICAP, we present to the central bank. We review the balance of our capital ratio. We look at the levels of tier 1 that we have within the bank relative to the total capital. We look at also the tier 2, the various costs of each of those forms of capital, the usage of the capital, and that becomes a very key decision point for the bank. Next. And sorry, maybe a comment about the capital. There was the bank exercised its call option on 100 million of its tier 1 capital. We also repaid early a tier 2 subordinated loan ahead of maturity, given the cost of that tier 2 and the strength of our capital base. The bank continues to look at opportunities for its tier 1 issuances relative to the bank's strategic direction.
I don't know.
And finally, just a brief comment on the financial results for March 2023 versus March 2022. I highlighted there on the balance sheet side the fact our assets have reached 4.6 billion, which makes us now the second highest balance sheet of the Omani banks. Our equity remains very strong. Net loans, we had a very strong growth in loans year on year at 14.9, but we matched that or exceeded that with our total deposits of 15.1% growth. Strong earnings, strong profit. The top line, operating income CAGR of 11.7% over 5 years provides a very strong impetus for the bank and reflects the very fast growth in the bank organically here in Oman, and really sets the platform for what our CEO, Mr. Ahmed, was referring to about really accelerating the bank's growth going forward with its strategic initiatives.
All right, thank you, Craig. Now, with that, we are ready for the Q&A. Let's open up for the floor.
Bishan has a question. Can unmute Bishan?
Yes, praise it.
Hello.
Yes, Bishan.
Good afternoon, Mr. Ahmed. Thank you, sir, for the presentation. It was quite informative and elaborate. Just a few comments and questions. Firstly, congratulations on the impressive loan and deposit growth and to see your strategy panning out. So I just wanted to know that the deposit growth has been approximately 300 million riyals, in terms of term deposits for the quarter. Could you just give us some highlight about what's the nature of these deposits and what sort of cost bracket would they fall in?
Okay, the nature of the deposit actually is a mix of all types of deposits. We've got term deposits and we got the CASA as well. Our focus is predominantly on the CASA, and the CASA on the retail side, the engine has been performing very impressively. And then on the corporate side, we attract a lot of operating accounts. So the flows that we see churning out, the liquidity or cash flows within the accounts, that is gaining momentum, especially with our digital services that actually have rolled out with a world-class transaction banking platform that we have launched last year. That is helping us a lot to be able to extend services to customers and then for us to be able to generate this kind of CASA deposits. But there are also term deposits, so which we are able to actually attract from the local market. So all in all, the blended cost for us is good enough.
All right, noted. Thank you for that. The next question is with regards to your Q1 results. The numbers look fantastic. The operating income was quite robust, quite solid. But one number that stood out, and I know Craig mentioned it briefly, was the cost of risk. And he spoke about how the cost of risk normalized. But when we see a sudden drop, we just wanted some more clarity or some more details on the same. Like he mentioned, the cost of risk was above 100 basis point, a while ago, and suddenly it drops to 60, 70 basis points. So from 1.4% in 2022 to 0.7% during the first quarter. Just wanted to understand what caused this sudden drop, and sort of what is the outlook on a normalized cost of risk for 23 and beyond.
Yeah, I will just briefly respond to this, and I will ask Craig as well to add whatever I'm going to say. Look, in 2022, we were very conservative. We continue to be very prudent as well. So what we did in 2022 is actually to make sure that we maintain enough buffers, because still the market is yet to recover from the weeds of COVID. As we are coming out from the COVID, you can see corporate Oman is still recovering from the COVID, and that may take some time. And it's important for us to exercise prudence in our approach to this, and we continue to do that. So whatever the reduction you have seen actually during the Q1 is not necessarily significant if you compare that with the Q1 2022. And therefore, we'll continue this prudence approach throughout the year until we are comfortable with the outlook of the market and we can see some signs of improvement. Yes, Craig, you want to add something?
Yes, I mean, just the only thing I'd add is if you look at the peer bank comparisons year to date, March 23, the banks all reported a fairly similar positive result, which is probably in line with what we'd expect coming out of the COVID period. The banks are increasing their provisions. So it's not unusual. In terms of a normalized figure, you can see that if you look at the quarters for March, I mean, that around that 60 basis points, it looks a bit more normalized than what you'd see at those elevated levels over the last 2 years. But I don't want to make any forward projections, but I think that's a good sign that the banks, generally, as well as ourselves, have seen that cost of risk drop in the first quarter. I think it also reflects what Mr. Ahmed has been presenting in terms of the positive story for Oman. I mean, that's very encouraging. And, we have a lot of positive feedback from our corporates who we're engaging with. Certainly on the back of work that we're doing now strategically, there's a very positive story in the Oman market. So we'd like to think that will become more of a normal trend than what we've seen in the past. And also hence my comments about the very key focus on our operating profit, maintain that cost income ratio, investing, but then seeing the returns.
Noted. Thank you for that answer. So one last, comment / feedback. The bank's done fairly well. We're glad to see the performance and the strategy, and wish you all the best. From time to time, we end up having this discussion with regards to the return on equity. And there's a reported number, and I understand that dividends are a function of reported net profit. But when it comes to the shareholders, which is the minority investors such as ourselves, a key number is return on adjusted sort of equity, or adjusted net profit, which factors in the perpetual interest. Now, for whatever reasons, Bank Sahara currently has 100 million real perpetual, which was 200 somewhere last year and might go up to 150 or 175 again. So that number where we actually see what the bank makes after paying perpetual interest, because that's an explicit cost to your debt holders. Just a humble sort of feedback where that number would be highly appreciated, because that is actually the apples to apple comparison of what the bank actually does after it services its perpetual interest, because that definitely goes towards your capital adequacy as well. And it has an explicit cost. So that's just my 2 cents on this subject, sir.
Thank you.
Yep. All right.
Yeah, noted. Thank you.
Thank you. Any question? Any other question?
And Joyce Matthew.
Yes, Joyce.
Hi, good afternoon, gentlemen. Thank you for the presentation. See, I have a few questions. First one is on your merger announcement today that the board has approved the merger with HSBC. But another one key point there is the cutoff date for book value calculation, which is not decided yet. One of your earlier announcement has said that it was supposed to be end of March or first quarter of this year, but we are in the second quarter of this year. So just wanted to know, what should be the cutoff date that you would be coming up, or when should we expect the cutoff date to be announced?
Okay. Guys, every important announcement will be made to the public as and when it happens, just like the way we have done today. And therefore, be rest assured, you will be informed.
So will it be on a forward basis, or will it be on a previous historical basis?
It will. Can you repeat your question?
Is it as on the date of announcement, or is it as on a specific historic cutoff date?
We will inform you. Don't worry.
All right. Yeah. Fine. Thank you. And is there any update on your merger talks with Bank Niswa?
Look, at the moment, you have seen the announcement, which we have made with HSBC merger. And as and when there is anything on Niswa, definitely equally, we will do the announcement accordingly.
Okay, thank you.
Thank you.
And another question that I have is, your balance sheet growth has been good over the past 5 years, as you've shown in the graph. But the operating profit growth has been substantially below the industry average levels. Now that you're going to merge with HSBC and potentially with Bank Niswa in the future, maybe, what's your outlook over the next 5 years? You just spoke about your next 5-year plan. So now we are looking from a new platform, an elevated platform where the inorganic growth is supposed to bring synergies and everything. So what is your and also considering the potential consolidation in the banking sector in Oman, what's your outlook, and what are the growth drivers and the challenges that you're seeing for the next 5 years?
That's a very good question. Look, obviously, quantitatively, I can't give you any numbers, but the historical performance can give you a better sense of the kind of performance that we can deliver. But strategically speaking, I briefly explained our strategy. Strategically speaking, we are very much keen to ensure we develop the business plan that remains resilient and relevant in this ever-changing marketplace. Because as you can see, the ecosystem of services, these are the things that we are actually introducing into the market. We are going to introduce new services through our new platforms that we have implemented. And these services will actually address a variety of customers' needs and requirements all across the segments in a way that is very compelling, in a way that will add a lot of value to the customer. So for us, the merger you see with HSBC will just help us as a combined merged entity to penetrate in a large customer base and be able to offer these ecosystem of services all across a bigger pool of customer bases, which we are very confident that will go a long way to add value to the lives of these customers, be it individuals or corporates, in the way they live, in the way they run their business or grow their businesses. That's the focus we are keeping at the moment.
Yeah, okay, fine, thank you. And another one is specific to one of your business verticals, which is the Islamic banking window. See, what I've seen is your Islamic banking window's loan book has increased by almost 25-26% over the last 1 year, which is 90 million loans added to the book. But while at the same time, the operating profit has doubled in first quarter as compared to last year. So one thing that I've noticed is that despite the addition of 90 million riyals in loans, the financing income from Islamic banking segment has come down by 8%. And even if we compare it with on a quarter-on-quarter basis, sequential basis, that is from fourth quarter to first quarter, it is down by 10%. So that means even though you had a asset addition, the profit contribution from Islamic financing income in a increasing interest rate scenario is not coming. But at the same time, this growth, the profit growth is actually coming from other operating income, which grew from 300,000 riyals to 1.8 million over the last 4 quarters. And even if we look at fourth quarter and third quarter, it is doubled, almost doubled. So can you please give us some color on this and tell us, what's the nature of this revenue stream and what are the future prospects and how do you see shaping the Islamic banking window shaping up for Bank Sahara?
Okay, Jesse, look, Islamic banking business is still relatively a small base. You're starting from a relatively small base. So the 90 million growth, which we have pointed out on a relative basis, is something which is very significant. Now, the funding part of that, the dynamics of the market liquidity towards the end of the last year and Q1 this year has been extremely different. And no one could actually anticipate that. And therefore, you would see the margins might have shrunk. Now, given the relatively smaller base of Islamic banking business, you would expect that kind of impact. But the good news is the prospects are positive. And the good news is we are able to grow the deposits and we are able to support the Islamic banking franchise. So going forward, I think we're very optimistic. The kind of business that we are actually writing in Islamic banking will actually be positive net for the bank. And we are sitting in a very strong liquidity position, capital position, with all of the other strategies that we are putting in place. Islamic is a complementary business for us, and we are very confident it will thrive, not just survive.
Yeah, but my question is more specific in terms of why are we seeing a big jump in the other operating income and what's the nature of this other operating income? Because we are talking about 5 times from 300,000 to 1.8
that's
million.
Correct. Yeah, that's correct. We have also done very well on an advisory side of our Islamic business. So we have, and we put that in the market actually. Recently, we were able to be their advisors for the Oman cement and on the sell side, and we were able to close that transaction with a good amount of fee. So you will see the kind of services that we are trying to broaden all across our businesses that are helping us to diversify the income streams. And by the way, part of the business strategy to diversify the income streams and reduce dependence on interest income by generating more income streams from other services, and advisory is one of those. So we are very pleased to have been able to deliver that, at least with Islamic banking, and the same thing is happening on the conventional side as well.
So do you mean to say that this is this could be probably recurring in nature, and it can remain with the same momentum, continue with the same momentum, growth momentum in the coming quarters?
Look, the service on advisory is new there. We have strengthened the team and the capabilities to be able to deliver this service, and we see a lot of market opportunities. But to say you can deliver the same thing quarter on quarter, that will not be the right kind of expectation. But are we going to focus on this line of income stream to be able to deliver on non-interest income? Yes, we are going to focus on delivering on non-interest income to diversify the overall revenue base for us.
Okay, perfect. Thank you.
Thank you.
And on one more question that I have is on your NSFR. Your NSFR is at 115% right now, and
Yes.
we have what's the ideal level of NSFR that you are targeting? Especially, I know we are looking at the funds from HSBC also coming up, but what could be the ideal level of NSFR that you might be targeting? Because what I see is other banks have higher NSFR ratios. So Sahara International, will there be any need for further addition of stable funding requirements?
I will briefly explain this, and Craig can add to this. The NSFR it all depends on your overall funding strategy. If you look at what we have, you need to strike a balance between cost and other things, because if you look at NSFR for us at 115 and go back historically over the last 3 to 5 years, you will find our NSFR is ranging between 110 to 150 range, simply because we want to strike the right balance to maintain our NIMs and continue to deliver on growth and profitability at the same time being resilient. Therefore, what is an ideal number? I think this number is ideal because we have good buffers, liquidity buffers, capital buffers to support us in our growth plan. And therefore, you may not want to go too excessive in that simply because you want, and that could eventually cost you a lot and put pressure on your margins and your NIMs. You want to add something, Craig?
Yeah, no, sorry, just to add to that. Thank you, Ahmed. Absolutely. The current level of NSFR is the bank is very comfortable with the level, and it's not out of market. We're very similar to the industry, with the exception of being HSBC. I mean, the NSFR as well as the LCR, sorry, to an extent, it obviously reflects the optimization of a balance sheet's liquidity. And it's very much in line with our risk appetite statement. And also that should note too that the bank can respond very quickly to its NSFR. It's obviously a very key part of the bank's ALCO, again, risk appetite and management of its overall liquidity. So the levels we're looking at are very, very comfortable, well above the 100% regulatory, and the buffer of 110, which we're seeing, we finished at 111 for December 22, 113 December 21. That is maybe even a little bit high. We can manage that potentially a little bit lower. So optimizing NSFR is very, very important to optimizing and maximizing profitability and risk. And similarly, we look at our LCR as a separate ratio for similar reasons.
Okay, fine. Thank you very much. That's it from my side.
Thank you very much. Okay.
Any other question you have? No more questions? Yeah. Yes, Nitika?
Yes, hi, can you hear me?
Yes, we can.
Okay, all right. Thank you. Thank you for the opportunity to ask the question, and great set of results. I had a very quick question on the CASA ratio. So I see that it has significantly improved from 44% in 2018 to 64% in 22. Yeah. And so in the rising interest rate environment, it is expected there will be some sort of CASA migration, and we see that in the first quarter 23, CASA percent has dropped a bit to 56%. So what I wanted to understand is that is that the baseline level to expect for 23, or you expect some more CASA migration, or will it be somewhere closer to 22 levels?
Okay, thank you, Nitika, for the question. There are two things which are attached to this reduction. One is a slight migration. And the second is the increase in the overall deposit base, which could have happened mostly on the term deposits and not necessarily CASA. That's why you've seen that. But we, as part of the business strategy, as you might have seen right from the beginning of our journey, CASA has been a major focus of our business, and we have grown quite substantially, and that focus continues to be the case. And therefore, you will see the CASA ratio, and rightly and naturally so, fluctuating quarter on quarter. But if you look at the year and average this out, you will find to be it's a very steady level, and that has been the major focus of our strategy, and we'll continue to do that. And all other services we are building are also going to help us to increase the inflows of these floating deposits, and therefore putting a lot more relief on the CASA deposit base. So Craig, you want to add something?
No, that's fine. Thanks, somebody.
Thank you.
Any other question? No. All right. If there are no more questions, we can close it here. We want to thank you so much for your time, for your questions, for your curiosity in us. And please keep that curiosity, and we will always be happy to update you as and when there is any significant development. Thank you very much, and have a great evening.